Welcome to today's stock market news update. Starting with labour market signals, the latest job openings and labour turnover survey report shows job openings dropped to 7.18 million in July, below what analysts expected. For the first time since 2021, the number of unemployed Americans now exceeds available jobs. This shift from too many jobs to too few could signal rising unemployment rates ahead, as it flips the forces that kept the economy steady after the pandemic. Markets are pricing in a possible Federal Reserve rate cut in response, which could impact borrowing costs and investment flows. Related to that, for the first time since 2010, people switching jobs aren't seeing higher pay than those staying put, showing workers have less leverage now. Also, the number of Americans not in the labour force but wanting a job has climbed to 6.2 million, the highest since mid-2021. Consumer surveys add to the concern, with 63% of people expecting unemployment to rise in the next year, a level of pessimism last seen during the financial crisis. This could lead to slower hiring and more layoffs, creating broader ripples in the economy that markets might react to. In US housing and construction news, there are several indicators pointing to slowdowns. Lumber prices have fallen to their lowest in a year, even with tariffs and supply issues, as buyers pull back. Home prices grew at the slowest pace in 2 years due to weak demand. Builders are growing more pessimistic, cutting back on projects, and the construction quit rate has plunged to its lowest since the global financial crisis, meaning fewer workers are leaving jobs voluntarily, a sign of caution in the sector. These trends could signal broader economic momentum loss, influencing sectors like materials and real estate in the markets. On consumer spending, which drives much of the US economy, holiday shopping is expected to see the steepest drop since the pandemic, according to a PwC survey. This matters because lower spending can hit retail stocks and slow growth. Retail sales have grown since the pandemic, but when adjusted for inflation, they've flatlined, showing minimal real increase. Other pressures include 31% of parents unable to afford back-to-school shopping last year, according to a survey by finance company Credit Karma. Meanwhile, 46% of Gen Z workers, meaning those born roughly between 1997 to 2012, are tapping into retirement accounts for daily expenses, per Newsweek. 10% of households pay over $100 a month for streaming services, according to Bank of America. McDonald's prices have doubled over the last decade, which could add to affordability strains. These factors highlight pocketbook pressures that might curb spending and affect consumer-based companies. Electric vehicle affordability in the US has improved, with gas cars now just 31% cheaper than EVs, down from 44% in 2019, per JATO data. This narrowing gap could boost adoption and impact auto and energy sectors over time. In manufacturing, the ISM manufacturing PMI rose to 48.7 in August, still showing contraction, but the second uptick this year. New orders expanded for the first time in 7 months. Prices paid eased slightly, suggesting less cost pressure. While the sector has contracted for 32 of the last 34 months, these signs could mean the downturn is easing, potentially supporting related stocks if the trend holds. Broader economic warnings include global debt hitting $324 trillion, per the Institute of International Finance, which raises questions about sustainability and could influence interest rates worldwide. Fitch Ratings projects US government deficits to reach 7.8% of GDP by 2026. Ray Dalio warns of a debt-induced heart attack under Trump's second term, saying no one is addressing it boldly. These debt levels could pressure markets through higher borrowing costs or policy shifts. Turning to stock market, just 10 tech stocks. Alphabet, Amazon, Apple, Broadcom, Meta, Microsoft, Netflix, Nvidia, Palantir, and Tesla have driven about 59% of the US market's gains since 2019. They've added $16 trillion in value, rallying 295%, while the rest of the NASDAQ rose only 55% and added $4.1 trillion. This heavy reliance on a few names could make markets more volatile if those leaders move sharply in either direction. On to company-specific updates. Macy's shares jumped over 20%, its second best day ever, after better-than-expected earnings. American Eagle rose about 23% on strong results, possibly helped by ads featuring Sydney Sweeney. These beats show resilience in retail, which could lift sector confidence. Google was fined a record €325 million by France for privacy issues, but its stock closed up over 9% after news it won't have to sell Chrome. Apple and Google have a deal to integrate the Gemini AI model into Siri, which could enhance their tech offerings and affect competition in AI. Elon Musk announced xAI will add ads to Grok. Musk also said Tesla's robotaxi app is now available for download. These moves could open new revenue streams and boost innovation in AI and autonomous driving, potentially moving related stocks. On policy and tariffs, which can reshape trade flows and costs for businesses, President Trump is appealing a court ruling to the Supreme Court. A U.S. appeals court said most of his global tariffs are illegal, arguing Congress controls taxes, not the president. The case centers on the 1977 International Emergency Economic Powers Act, used by Trump to declare a trade emergency over deficits and unfair practices. The ruling is paused until October 14th, keeping tariffs in place. Trump says losing tariffs could make the country unbelievably poor, but winning might make it unbelievably rich. He also mentioned using tariff revenue to replace income taxes, though the deficit raises doubts. August tariff revenue hit a record $30 billion per Reuters. These developments could alter import costs and supply chains, influencing inflation and market sectors like manufacturing and retail. Trump plans to block a wind farm off Massachusetts, which might affect renewable energy projects and related investments. In tax news, the Treasury says digital content creators like streamers, influencers, and podcasters are eligible for the no tax on tips deduction per Business Insider. This could support the creator economy. Finally, geopolitical notes. The UAE warned the US that Israeli annexations in the West Bank could harm the Abraham Accords and block expansion, per Axios. Such tensions might unsettle global markets through energy or trade disruptions. That's today's roundup. Stay tuned for more updates and hit the subscribe button.